This week's Forex video takes a look at some interesting candles and Fibonacci levels on the euro dollar, pound USD, dollar yen, and Aussie. First of all, though, be aware that this video is shown to a global audience, may not be suitable for everyone. Take a look at admiralmarketsglobal.com, select your country of residence, and contact the appropriate entity for more details and information. Also, please be aware that trading for exchange and global financial markets is considered high risk. Please seek the advice of an independent financial advisor for more information on that. This video is for educational and informational purposes only. Plus, by continuing watching this webinar and video, you agree with this disclaimer and you are aware of the risk involved when trading. Let's start with the euro dollar weekly chart. Basically, we see a very bullish candle and last week a very bearish candle, and those two are quite conflicting. I think there's going to be an interesting battle between these two candles in the sense that price could be retesting both the high of the bearish candle and the low of that bullish candle this week. Perhaps even a doji at the end of the week where price goes up, down, up. Basically, respecting the support or resistance would not surprise me from that point of view. Let's take a look at the daily chart, and you can see here, for instance, that price at this point, or even the 4-hour chart, is a bit bouncing at the 61.8 fib here. That is a support level. So a bit of a bounce here would not surprise me, but how far could that bounce go before we might get a continuation back to retest the bigger weekly support level and this trend line? So that's something that I would not be surprised to see, is price basically making a bit of a bounce to retest last week's candle, find resistance, make one more move down to challenge this support trend line, and whether this support trend line breaks or not, that's the big question. If it doesn't, we could see another bounce and price basically ending up where it opened this week. If it does, that could indicate a bigger bearish correction or even a reversal for a downtrend. This is a sturdy trend line here. This trend line has been basically providing support already since, well, 6 months. So if this trend line breaks, then that could be a very big thing for a euro dollar potential downtrend. If it doesn't, this could just be a consolidation. This could stay in a triangle like this, and price will break out, perhaps next week to the upside or to the downside. So it's going to be an interesting week. I expect here at this point a bit of a bounce on this 4-hour chart, as I already indicated, to retest the resistance, but I don't expect it to break necessarily the tops here at around 113.50, 113. Those could be very strong resistance spots as if price does make this bounce. If it doesn't, then I'm looking for basically a break of these candle lows. We already see 2 bullish candles here, so I'm looking for a continuation. That means break below these lows, down to these fibs, which can then be bouncing spots. That would be an intraday trade. On a Tuesday, Wednesday, Thursday, that could be potential right here. And then, of course, there could be that bigger bounce at the 88 or 78 or trend line for this euro dollar. All right, looking at the pound dollar daily chart, we see basically price pushing through this support trend line as we speak. On Friday, a great break to the downside. Now, at this moment, we hit the 272 target, and it's not very clear if this is just an ABC correction or if this is really a downtrend. Looking at the weekly chart, we do have a break of this trend line, but we also have some horizontal support levels to think about, like here, for instance, and also this weekly bottom. I don't think that the downtrend is established as yet, unless price really breaks through those support levels and the minus 61.8 target, and also basically the 140 psychological round level. Those are important levels before we get a full-fledged downtrend. For the moment, though, I do think there's space down to those 141, 140 levels. There could be a bit of a bounce at the minus 272 target. So if I look at the 4-hour chart, we see a bit of wick on these 4-hour candles. And if it does bounce, I think that could be an interesting retracement for that downside down to 141, 140. So I'm looking for a pullback on the pound. I don't think now it's a particularly good spot to short right at the minus 272 target. And also these targets pretty close by. But I do think it becomes interesting if price were to retrace up to the 38, the 50, the 61.8, even these deeper fibs. It all depends on how price will retrace on this 4-hour chart. Are we going to get a sharp zigzag? Then I would look for deeper fibs like 61 and 78.6 fib. If we get more of a bear flag, then probably the 38.2 or the 50 are turning spots for that push down to the target. Once price gets to the target, then it's going to be interesting if we get a bullish bounce or price breaks through those levels, in which we might be, set up for a bigger downtrend. Of course, be aware of the British referendum next week, Thursday, where Great Britain is voting in a referendum on whether to stay or leave the EU, which could have an impact on the Forex market and pound in general, of course, and the euro. So that's something to be aware of, and that could impact the market in unknown ways. So we're going to have to wait for that and see how that that follows through. But for the moment, technically speaking, for this week, a pullback continuation seems the most likely. And regarding that referendum, by the way, we have a webinar on Thursday, and Nenad and I discuss all the aspects of that next week, Wednesday as well, just before the referendum. So I hope to see you in those webinars. We also have weekly FX recap on Monday, taking a look at setups with Nenad, his expert opinion on time fractal on Wednesday, and my live trading room webinars on Tuesday, Wednesday morning at 7:45 UK time AM. We're taking a look at price action on Tuesday and fractals on Wednesday. All right, next on the list is the dollar yen. Basically, the dollar yen is challenging last month's candle low. That was a bullish candle, in fact, a decent turnaround candle at the 38.2 fib. But if last month's low is broken, that means that price, I think, has a good chance of getting down to the 50 fib at 175. So basically, there's also a bit of a bounce, basically support here. There's also more or less some resistance of these candle closes and wicks. So that level could be, I think, a sturdy support level, also the psychological around 100 level. So that's, of course, if price breaks this low. If it doesn't, this itself could be a bouncing spot. So let's see how price will respond at this low. If it bounces, that could still be a 38.2 fib bounce. If it breaks, then price could fall down to the 50. I'm going to measure if there's a break or bounce on this daily chart. So if price has a good daily close below this 105.50, with the close near the low, I think that would indicate a break of that level, after which I would be looking for a pullback, probably roughly to the same zone, maybe a bit higher, 106, 106.50, for a follow through down to that 50 fib. All right, so basically a break, pullback continuation on this daily chart. Now, if price fails to break, if there's at the end of this day today or Tuesday, there's some wicks here, all right, and maybe even bullish candles, then that could indicate the daily bounce off this support, and we might see a bit of a rally, perhaps even further than this resistance trend line. But at first, I would say to test this resistance trend line. If that trend line breaks, however, then we might see a bigger rally, of course, extending beyond this orange trend line, perhaps even to this top. But at first, this bottom, I would say at 116. All right, so that could be the first target after the trend line break. Moving on to the Aussie, basically the Aussie bouncing at the 61.8, had a pretty good rally last week, now a bit of retracement. So these two bearish candles are a bit of a warning signal that price is both in a bullish momentum, but also a significant bearish turnaround with those two daily candles. So what's going on? Well, I think at this point I would still prefer the upside, just because to me this bullish momentum, this looks a retracement and this is a reaction to it. So from that point of view, I think that there is more upside potential than downside potential. But what I'll be looking for is basically for price to break above 74.20, all right, 74.20, hook back to the 74.20 and continue. Once I get the hook back, I think that we'll see a daily candle here that is bullish, with a bullish close above 74.20, and I think that would be a signal for continuation. Last week we had a pretty interesting trade. I was talking about this candle last week that had to close above the previous candle high with a close near the high, and that was a very good trigger candle, and the subsequent move after that was about 140 pips. So I like that trade setup I talked about last week. So this week, I hope that something similar will happen when price basically breaks above it, then closes lower, and then bounces back up. When that happens on the 4-hour chart, I think on the daily chart we'll have one bullish candle plus a doji, and I think we'll see a follow through. If it doesn't happen, let's say price moves up like this, but then closes again below 74.20, then basically this could actually be a retracement back lower. And in that case, the upside is probably retracement. This could be the first momentum. This is only a retracement, and we might see actually a further bearish down move to the 50 or 61.8 fib. If price, however, stays above the 74.20, then we could see a rally up to the target, which is for the moment the 76 level on the 272 target here as well, around 76, as you can see. That will be the first target for the Aussie to the upside. So that's how I'm basically going to measure the reaction of the Aussie around this zone. Interesting enough, price could really go both ways in this case. It's set up with momentum to both sides, so we're going to have to keep an eye on price action. So I would invite you to the webinars this week to keep an eye on that. Thanks, and wish you all great trading.